Give me a sense of what you originally set out to try and achieve. Okay, so you've been in production for 4 years, but there was a bit to it before that point. So what was the team set out to do? What did you think you'd be able to build, and indeed, were you able to stick to that plan?
Yeah, absolutely. Well, maybe I could just give you just a little background on myself and sort of how I got here, and I think that does help fill in some of the gaps as well. So I'm a metallurgical engineer. I spent the first half of my career mostly working in technical and operational roles, predominantly in base metals, in zinc, nickel, and copper, mostly with a big Canadian company here, Teck. It was Cominco and became Teck Cominco over the years, and now Teck, both in Canada and in Australia. When I started working, my first corporate role was after I completed an MBA, and I started working for Placer Dome, which was a big multinational gold mining company here in Vancouver. Produced 5 million ounces of gold a year. I was working in corporate development for several years in the early 2000s until we were taken over by Barrick, which is a time when I sort of shifted in 2006 more to working in junior mining. And that's when my career took a little bit of a different turn. I found myself as the CFO, if you can believe it, which is an unusual role as a metallurgical engineer. But I found myself as the CFO of a junior mining company called Farallon. We raised a couple $100 million. We built a mine in Mexico. We put that mine into production back in 2008. It was a high-grade underground VMS deposit. And we ended up selling that company to Nyrstar, the world's largest zinc producer, back in late 2010. And so from there, I moved on to become the CFO of what is effectively now Galiano. So the company was called Keegan Resources. We were an exploration stage company when I joined there back in early 2011. We were able to put together a merger with an Australian company called PMI, which we then changed the name of the company to Asanko Gold. We built what's now the Asanko Gold Mine. We raised several $100 million to do that, put the mine into production, and started commercial production in first quarter of 2016. And after a year of operating the mine, I actually left the company, and I had an opportunity to become a CEO. And so one of the reasons that I became a CFO in the first place was I thought it would be a good pathway to eventually to be able to run a company. It took 10 years as a CFO being there, but in a couple different companies. But eventually an opportunity presented itself. I was to run a small company called Alio, which you may know has been taken over by Argonaut Gold now, a Mexican-based gold producer with an interesting project in Guerrero, the same place that I had previously built a mine. So about a year ago, I was asked to come back to what was then still called Asanko as the CEO. And I think when you talk about where we're headed and where we're seeing ourselves have gone over the last year is, one of the reasons I came back was I saw an opportunity to really transform the company from a project-related mine building company into more of a sustainable business. And I think when you look back a year ago when I came and I joined, the company had been, the mine at that time had been running for 3 years. If you look back over those 3 years, there were some challenging times, but the mine actually produced about 300 million in EBITDA over that 3-year period. There's a good margin at the Asanko Gold Mine. The problem was, and I certainly heard this from some of our key shareholders when I came back, was that we reinvested all of that 300 million, and in fact, most of our treasury back into the ground. And so the plans that were there in front of us as well envisioned continuing that investment. They were going to double the capacity of the processing plant, go from a 250,000 ounce producer to a 450,000 ounce producer. It required ore transportation infrastructure. So the foreseeable future in front of our investors was that was going to continue. And I had questions like, well, this isn't a real business. You're just taking all the cash flow that's coming out of the mine and putting it back into the ground. When are we going to generate some return for our shareholders? And so we really set about last year trying to change that narrative. And the company was in a difficult position because it had very little in the way of treasury. We'd run our treasury balance down to below $10 million, which is awfully difficult to run a mining company with less than $10 million of buffer in the bank. And as well, we lacked a credible direction where the mine was heading. We didn't have a credible life of mine plan that didn't envision a substantial amount of capital. And so I think over the last year, we've been able to rectify both of those things. And we really changed, I think, the narrative at the mine site last year away from just producing ounces to producing cash. And so over the year, as we wound down our capital spending programs, and we were able to start generating cash flow. Certainly, the rise in gold price has helped in the last half of the year, to the point where the mine was able to actually distribute, just make distributions to its shareholders, to the joint venture. In Q4 last year and in Q1 this year, we distributed $65 million, so $32.5 million to Galiano's account, and more of that is coming in Q2. So I think that has helped fix our balance sheet. As I said, we're now sitting with just under 54 million in cash and no debt. And during that period, we were also able to come up with a plan with our joint venture partner to develop the mine, making the most of the assets that we already had. So we have this wonderful 5.5 million ton per year processing facility, treats ore from multiple pits on a wonderful land package in Ghana. We've now produced a credible life of mine plan that doesn't envision a lot of capital spending. We've got a 10-year mine life here, and we published that in February. And so I think the basis has been reset, and now it's onward and upward in 2020.